Hey guys, it's Carter. Welcome back to the channel. I hope you guys are all having a fantastic day today. Now in today's video, we are going to be talking about the best swing trading strategy for Moomoo. So I hope you guys all enjoy it. If you guys have any questions, by all means, ask them down in the comments. And if you guys want to learn how I trade, the strategies, the scanners, everything, I do have an amazing swing trading school where we talk about all that. We have group chats, we have private live streams, we have quizzes, lectures. It's a one-stop shop for all of your swing trading needs. Invest in that education, and you guys can use code YouTube to get 20% off. So check it out. I'll see you in there. But guys, let's kind of dive into this. So swing trading, what is it? How do you do it? So for me, swing trading is when you buy a stock, you hold it for more than a day, but less than a year. When you buy and sell a stock during the same trading day, that's considered a day trade. It's a different strategy, mindset, all that stuff. Now, when you buy a stock and you hold it for more than a year, that's considered a long-term investment. That's when you start caring about where the company is going to be in the next year or two, 2 years down the road, and you start looking at, fundamentals, earnings, and all that stuff. It's a little more risky, a little different strategy as well. Now, on average, I hold my swing trades anywhere from about 6 days to about 10 days. Obviously, there will be times where I buy a stock and then the next day it squeezes up and I sell out. But on average, it's around that time. So how do I use Moomoo for all of my swing trades? So it's very, very simple. The first thing that Moomoo offers that I absolutely love is they offer very, very good indicators. So indicators are just certain things that help you determine where the stock can go in the future. So the two main indicators I use is moving average lines, and we'll talk about how to put them on, and RSI lines. So, moving average lines are these blue and red lines here. So looking at them, you guys can see, just by looking at it, you guys can see it has this nice upward trend. You guys can see we have a beautiful, beautiful upward trend in the stock, right? Just by looking at those lines. On top of that, as we look at it a little clearer, what do you guys notice? You guys notice that this blue line, every time it hits it, we see tendencies of it getting buying pressure, right? It hits it there. It even hits it a little bit here. And as we continue to go, it even hits it up here. So we understand that we've seen these tendencies of it using it as, support in the past. So now when you make trades to possibly buy the stock, you understand you're going to want to buy as close as you can to these moving average lines, okay? Now, this red line here is another moving average line. This is the 200-day moving average line, and the blue one above it is the 90-day moving average line. The main difference between the two is the 200-day moving average line is going to be a stronger support. So we'll see a lot more buying pressure there than, the 90. But the 90 is still going to be stronger than the 20. So, the higher up you go, so, if the 200 and then there's the 250 and whatever it may be, the higher up you go, the harder support and harder resistance we see a tendency of seeing. Okay, so these are the main ones that I use, the moving average lines. And then on the bottom here, you guys see the squiggly line. The squiggly line is what we call an RSI line. The RSI stands for the Relative Strength Index. In simple terms, it determines if a stock's overvalued or undervalued, and you can make trades by looking at them. So looking back here, let's look at this more recent trade that we hopped in at near and around 25.81 was our entry on this trade. You guys can see that it was trading for about a 27 on the RSI. We can go ahead and we can draw a little thing here, little horizontal line so you can see it. So let's go back and look at the last time it was on this line right at a 27. So let's continue. So you guys will see the last times it was there was right here. Look, right in here where we saw this great move where it went from 21 to about $25. A little bit in here where the stock went from 21 to about $23. all the way in here where the stock went from about $21 to about $23. So this index here determines if the stock's overvalued or undervalued. It's a very, very good tool that they offer, an indicator that they have. Another reason why I love Moomoo is because they have these great drawing tools. So you guys can see right in here, they have a variety of different good ones. This one here called the long position. As a swing trader, or at least my strategy, I buy into the stock. I don't short the stock. I buy into it, hoping to buy low and sell high in simple terms. Compared to shorting, where you pretty much you're betting for the stocks to go down. With long investing or trading, you're hoping the stock's going to go up. So looking at it here, you guys can see the reason I hopped in here. We could hop in near and around, this 25.81. We could pretty much adjust our stops, put it right below this 90-day moving average line, right? Risking about 1.6% to possibly see this squeeze up to old resistance, where resistance is where we get selling pressure. You guys can see it hits this twice, establishing $28 is a very, very hard resistance for this stock here. We can hop in, can see this rally. So we're risking 1.6% to possibly make upwards, of 9%. That is a 5.9 risk and reward. So I'm risking $1 to possibly make $6. The great thing about these types of trades and strategies is I could be wrong 5 times and still make money on this trade. And what I mean by wrong is if there was 6 stocks, okay, and each of these that just say on 6 stocks, 5 of them I lost money. On that 6th one, I would still make money on them because the risk and reward, that's how it pans out with that ratio. So obviously the higher up you go, so like if you're risking $1 to make $10, you could be wrong 9 times. Having good risk management is super important with trading. So with my strategy, what I love to look for is stocks on an upward trend that if sold off down to levels of support, the support could be certain things. They could be moving average lines. They could be price support. They could be a variety of things that help me get an indication where we could see possible buying pressure start entering this stock. So this is a very, very simple, easy strategy that I always look for. Now, we can go ahead and show you one of the positions that we were looking at here for this upcoming week here is ticker symbol EGO. This one here is a pretty riskier one. It's a gold company, but you guys will see that it's trading near and around this 200-day moving average line. So that blue line, right? So it hit it here. We're starting to get a little squeeze up, but it's just kind of consolidating. So this one here with the risk management here, I'm risking $1 to make $3.27. So my stop loss, obviously you can adjust these. So if you want to have a tighter stop, then obviously your risk and reward goes up because you're going to be risking less money to possibly make, the same amount. So, very, very simple strategy, upward trend, sold off down to a level of support. Hopefully we can get a move up to at least $11.65, if not up to about $13. That's the plan. The good thing about this, good risk management, and understanding basic indicators with Moomoo. Now, how you go about adding them, it's very, very simple. All you got to go to is this gear icon, chart management, manage indicators, EMA. You guys can see the moving average line. I have the 90 and the 200. Now, for the RSI, you scroll down and you go RSI. I go RSI 12 right here, and we are good to go. Those are basic indicators you guys can use for swing trading with Moomoo. And I hope you guys all enjoyed it. We'll put links to Moomoo down below if you guys want to sign up. I highly recommend them. They're absolutely fantastic. And we'll see you guys later. Hit that like button, subscribe, and we'll see you guys in the next one. Take care.